Welcome back. We are up here again now in Mark Falter's office. He is the president of Mid-American Wealth Advisory. Again, thanks for letting us come hang out with you here for this morning. Today we're talking about our investment portfolios for retirement and our management or our risk tolerance. How aggressive do I want to be in my portfolio when I'm investing for my retirement?
Well, it depends on your age. If you're younger, in your 20s and 30s and 40s, you want to be as aggressive as possible.
Yeah.
Matter of fact, I've always said, really the best portfolio for a younger person, very much like what Dave Ramsey says, and that is buy a good S&P 500 fund, put it in an index fund, pay low fees, and don't look back and always put money in every month. But it's when you get closer to retirement that you can't take these type of dips. And nobody cared last year about portfolio rebalancing, but all of a sudden this year we care. Why? Because the S&P 500 is down 17% off of its highs. And people aren't used to that. We've been in a bull run that's lasted since COVID hit. And so where that becomes a problem is when you're getting very close to retirement. When you're a year, 2 years out, a 20% reduction in a portfolio is not something you want to handle. And you remember people in 2008 that were ready to retire and had to work until they were 2013 to get there because it dropped so much. And I think we are not out of the woods yet on this. When
people get that close, I can imagine that's an emotional time.
Oh, yeah.
How does emotion factor into our risk tolerance?
It's a lot. As a matter of fact, that is something. I've been in the industry for 35 years, and I have said many times it's probably the area that's hard to teach. You just got to know how to spot a person's risk tolerance because what you don't want to find out is that they have a very low risk tolerance when the market goes down. Because if they sell at that point, they're going to lock in those losses. But if people have ever thought about rebalancing their portfolio, now is a good time. There's things you can be in that can actually delete the risk. In other words, you can't go down any further, but it'll go back up when the market goes up and bring safety to the portfolio.
How do we analyze our risk tolerance? What factors should we look at when we're talking with you about our portfolio? What should we be looking at and considering?
Well, what we do here, we actually have a proprietary software program that we actually, a matter of fact, I got to meet with a few people today on it, and we've taken their entire portfolio and put it into this, and it figures alpha, beta, standard deviation, much more than you would ever even know to look for. Wow. And it will tell you on a very simplistic risk scale from 0 to 100, 100 being the highest, 0 being the lowest, where your real risk is. And I have often said to people, I don't want to say that your advisor is doing a bad job, but his concept of risk and your concept of risk might be different. You don't want to find out the hard way when the market does do what it's doing right now.
How do we go about taking that questionnaire or filling out those forms to get our risk tolerance level?
Well, you could, of course, call us or go to our website at www.midamericanwealth.com, and there is a little spot there. You can take the Riskalyze quiz. And it'll actually measure your risk tolerance there. And then if you want to go the next step, we can actually take your portfolio and put it in the software, and it'll tell you how much risk is involved. Matter of fact, it'll actually stress test your portfolio and say, if this same portfolio were in 2008, this is what it would have done, 2013, and that's what you want to do. You want to stress test it before you put that thing live, because at the end of the day, when you're pulling income out of a portfolio and it drops 20%, you're selling 20% more shares, and you want to take from the eggs and not eat the chickens because you don't know how long you're going to be retired for. And I always said to people, you don't just want to retire, you want to stay retired.
Well, to get connected with Mid-American Wealth Advisory, call 816-640-5888 or go to midamericanwealthadvisory.com.